To this earnings conversation with the management of Tata Communications. They came out with the quarterly numbers a while ago, and the revenues were up about close to about 3% odd. EBITDA did slightly better at about 5%. A flattish net profit performance, about a couple of percentage points lower. Within the performances, though, I thought the data segment performance grew. Data services grew about 5% versus about 1.2% in quarter one, which might be a bit heartening and otherwise what seems to be a standard flattish quarter. Let's get in Kabir Ahmed Shakir, who's the CFO of the company, to talk about how he thought the quarter and a half has gone by and what is the outlook ahead. Kabir, great having you. Thanks so much for joining and hope all is well.
Yeah, thank you very much, Neeraj. Thanks for having me. Quite happy with the quarter. We had called out that our ambition is to get to double-digit, revenue growth. And I think this quarter performance just gets us in that right trajectory for the data business to grow in double digits. So we're quite happy with the performance. I'm also particularly pleased that the growth is quite broad-based across most of our portfolios, except our subsidiaries. So the quality of the growth is also quite good. And we have maintained our strong performance on profitability, and our focus on balance sheet hygiene and free cash flow is also demonstrated well in the quarterly results. So quite pleased with it.
Okay, a bunch of follow-ups that I have, as you would have expected. Now, first, data services, a 5% growth versus 1.2 in quarter one. Now, is that heartening at a time when the overall number has grown just a tad below 3%?
If our focus is the data business, and if I unpeel, if I unpeel the data business, per se, the 4.6% sequential growth also shows a 16.5% year-on-year growth, for this business. All the focus, areas that we have within DPS are showing the right focus and right trajectory for us. So we also called out a couple of quarters ago that we are having healthy order book generation, and that order book, takes time to manifest in revenue, which is what we've actually seen in this quarter as well. So overall, I think it's a good performance in the quarter.
Okay, I'll come to the order book as well. Just a couple of follow-up questions here. One, when I heard you say in your answer one that you are aiming for double digits, which ranges from 10 to 99, right? And you've done about 6% odd, give or take, in the first half. Am I to assume a tepid 2% sequential growth in the remaining two quarters, or would you bat for slightly higher?
Well, Neeraj, I don't want to give any, forward-looking guidance, on it. Historically, we have grown for the full year, in low to mid single digits. Our first marker as we come out of the pandemic is to start recording our performance, in double digits. Okay. Within that, when you unpeel, our core connectivity business as a market has been degrowing, but we have been recording and holding fort and recording low to mid single digits there, which means our focus of digital platforms and services need to grow in very, healthy, double digits in order to get a consolidated, view for the company. And we all know that the voice business anyways, is declining, and our focus therefore has been on data. So that's what I would say. Okay.
So core connectivity, I believe in quarter one grew 1% and incubation had grown 10%. Now, what is the scene been in quarter two? And also operating loss, I think it had narrowed to about 80 crores in quarter one. What's the Q2 experience?
Yeah. In fact, Q2, if you look at our core connectivity business, grew quarter on quarter about 2.7% and year on year about 6%. So core connectivity has demonstrated quite well. Our incubation business has grown really well, 36% sequentially, quarter on quarter, and about nearly doubled, about 182%, year on year is what the growth on incubation business is. As I've said before, for me, the incubation business growth is the biggest parameter, and the operating leverage will start kicking in, and losses, will come, down. Our focus is on design wins. Our focus is on in revving up the growth engine, out there. And once we reach to a particular scale, we should be able to get that business also growing profitably for us. Right. So that's where the focus, very differentiated is. On core connectivity, we are, holding fort on on our profitability, and that's delivering well.
Okay, so that's with regards to the data services piece. Just a performance of the cloud business, because I think Q1 had a fairly strong print out there. Can you talk a bit about it?
Yeah. Look, our cloud business, I mean, there are, I would say some non-recurring revenues that you actually see in quarter after quarter. So sometimes you need to unpeel these one-off revenues to be able to get that consistent trend. I would say the market, you see the adoption of cloud, you see the digital transformation, journey across enterprises, and therefore we are just riding that wave quite well. And we are seeing both new logos and new accounts that we are getting in this business, plus also the usage improving of our existing customers, in cloud as well. So that is showing us a healthy trend for us.
Okay. Operational metrics, are you reiterating the 23 to 25% band of sorts?
We are, Neeraj, I would, although since the time I've said 23 to 25, we've always operated at the higher end or even breaching the higher end of the guidance. But I wouldn't worry about one quarter, here or there. And I know I'm talking from a position of strength because we have delivered better.
Yeah, sure.
That is the long-term, guidance that I would like to give the market, that we would like to operate in. We have had certain, one-offs. We've been helped by Forex, in this quarter. So all of those things have played and helped us, deliver. But our guidance still remains between 23 and 25.
I was just wondering, a lot of growth companies say that we don't want to really give a lot of importance to margins. As long as they come within the band, we would rather focus on growth. Would that be...
Well, I would say we have, in the last 18 to 24 months, focused quite a bit on getting the right operating model. So therefore, getting our costs in order, eliminating waste, from the company, bringing in efficiencies, all of which we would like to, in fact, most of which we've actually passed it on. We were operating at a much lower levels of profitability 2 years ago. And we've now at a very healthy level of profitability. We would like to maintain this profitability, and any further improvements that we see, we would like to reinvest back to accelerate, growth of the organization. And that's where I think the focus should be. Internally also, we are focused on profitable growth, and that's the way in which we would like to responsibly run the business.
Okay. You mentioned about the order book. Can you give us some color of how the order booking was and how do you see it going ahead?
Yeah. In fact, as we coming out of the pandemic and as people have and companies have started resuming, work, and people have coming back to work, we are, our engagement, with our customers have gone up, and that's getting translated into very healthy order book. For the last 3 quarters, we are seeing an uptick in order book. I wouldn't like to, quantify that as yet, because as much as we see the health in the order book, the revenue conversion is also getting elongated because of the supply chain, issues that we are all aware of. The lead times have actually increased quite fold. I hope it is bottomed out. I don't see it any more worsening, but I'm yet to see any improvements, in that particular area. So that's the reason why I'm a bit cautious, on order book and revenue conversions.
Kabir, just purely, I hope you can hear me clearly, but just purely from a market cap or a stock performance perspective, a bunch of notes that I've read starting October 2021 until now, everybody talks about how once the high quality revenue growth numbers become recurring in nature, that the valuation transformation for Tata Com can happen. Now, I know you mentioned at the start, I'm just moving trajectories, but just before that, one last question on the revenue piece. And you mentioned at the start that you're first striving, coming out of the pandemic, for double digit, and then things move ahead beyond that. My question to you is, when do you reckon you could actually see a sustainable encore of the kind of performance that you've done for the cloud, for the data services business in Q2 happening repeatedly?
Yeah. Neeraj, I mean, what I want is, of course, a sustainable, and repeated performance. But let's also try and understand, the context in which we are operating. And I don't want to sound like an excuse. We did have, multiple waves of the pandemic, and as we were getting out of one, we got into another, and we had, like most of the companies impacted, by it. We had the great attrition. Again, most of the companies, also, faced that same issue. We faced that issue, after one quarter. Then comes the geopolitical, situation with the Russia-Ukraine crisis and the supply chain, issues that came as a result of that. Now you see a very high interest rate and a volatile currency, markets as well. Every quarter we are actually seeing, and now we are talking about, recession and growth, and the Fed has been quite categorical. They want to tame inflation, even if it means at the cost of growth. So there are various external factors at play, and we are, as a management, trying to adapt to each of those things and yet, keep progressing ahead. Equally, a lot of these external also, result into internal challenges for us, like, for example, attrition, where, we've had, our share of woes, a few quarters ago. Now it's behind us. So as we get out of it, when there's a new normalcy that actually sets in, I think I would probably have a fairly, more clearer idea. But for now, I would say we are cruising in the right direction, and we hope to, repeat the same performance.
Got it. Kabir, one question on this whole situation around either Russia, Ukraine, or even what supposedly happened between America and China with regards to American personnel in Chinese semiconductor shops. Now, the chip shortage has been an issue that was spoken about a lot 2 quarters ago, showing some signs of ebbing as an issue. Has it flared up again? Are you watching that with concern as to what's happening between US and China also takes center stage?
Yeah, we are watching that with concern. From where we see and materials that we procure, we actually are not seeing it worsening any more than what it is now. We have not yet seen, at least on the routers and equipment that we buy, it improving as yet. There are some models, and some vendors who have actually improved lead times, but that's not something which we procure, and therefore that has not positively impacted us yet. But it's something which we are very, very carefully watching.
Okay, update on Capex. I believe you deferred some bit of Capex due to the uncertainty. Does it stay that way?
We haven't deferred any Capex on uncertainty, Neeraj. So actually, our spent Capex is lower. Our approved Capex is still in line with what we want to spend, and therefore approvals are going in on the quality of the business cases that we actually get. The spent Capex is lower just because it's not delivered to us yet, and our payment terms are on delivery and X days after delivery. So since the lead times are elongated, therefore the cash flow associated with those Capex spends is also getting pushed into future quarters.
Okay, I have one final question, Kabir. And sorry, I actually thought that there was some bit of deferment announcement around Capex in Q1. Maybe I was mistaken. So excuse me for that. I have one final question, and that is on monetization of properties. Now, it's a question that I'm sure you get asked often. Since we're talking for the first time, I thought I'll try and figure out what is your update there so that I know what to ask you, not ask you the next time.
Yeah. In this quarter, we've had a couple of properties that we have, sold, very small value, which is reflected in our results. But I think the Uber theme and the spirit of your question, answering to that, Neeraj, we have very well articulated real estate strategy that we have gone and present to the board and approved by the board. Ideally, I would like to match the cash flow coming in from real estate monetization with the cash needs of the business. So they are actually better utilized, that way. Having said that, we will also, of course, take advantage of any market, benefits that we may have if we need to dispose, of certain properties. So we will, keep monitoring that as we get along and keep the market informed of it.
Fair call. We'll wait for that. Kabir Ahmed Shakir, thank you so much for taking the time out and speaking to us today, and all the best for the quarters ahead.
Thank you very much, Niraj.
And viewers, thanks for tuning into this interaction with Tata Communications. Thank you.